Hi, everyone, and welcome to a new episode of the VC React podcast. Every week, we bring you insights and reactions from top VCs, LPs, and angel investors reacting to the latest news on startups, VCs, and investment plans. Let's jump into it with our amazing guests for today. Eyad Albayouk, General Manager at Flat 6 Labs KSA. Hassan Ikram, an angel investor, founder and CEO of Cotyledon for management consultancy, and founder and chairman of ThriftPlan. And my co-host, Jamie Lane from FWDstart. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to the company's website. Our weekly news are brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. Before we start talking about the news of the week, I want to tell you about OCTA, our new sponsor. OCTA is an AI-powered workflow automation platform that helps modern businesses collect payments faster, smarter, and without the back and forth. If you're a founder or a finance leader, you know that managing receivables requires 14 hours plus every single week. It's chasing corrections, negotiating payment terms, updating invoice details, and constantly following up with your clients.
OCTA automates the entire process, handling everything from invoice disputes to payment confirmations, so your team can focus on growth, not admin work. That's why more than 100 companies like Careem, Lean Technologies, and Ikram trust OCTA to streamline accounts receivable. Check out OCTA at weareocta.com, that's WEAREOCTA.com, and experience the modern way to manage receivables.
What a wild week for the region. Saudi locked in some huge AI deals at the Saudi American Investment Forum. Qatar is making big moves in global energy, and the UAE keeps doubling down on being a global hub for capital. The Gulf is not slowing down. That being said, I have come prepared with some tough questions for you too. So let's start this conversation with Humain. Jamie, what's Humain and what is it all about?
Yeah, so Humain, I guess it's been touted to be in the woodwork for quite some time. I think we just didn't know exactly what sort of shape it was going to take, and we have a better idea of what that is now. So it's going to be a AF-owned AI company. It's going to be chaired by the Crown Prince, Mohammed bin Salman, and designed to operate across the entire AI value chain. So from infrastructure and cloud to data models, applications, and I suppose the remit ultimately is to position Saudi as a global leader in AI, and a specific focus is on which they've earmarked is developing one of the most powerful multimodal Arabic LLM models in the world as well. It's going to be HQ'd in Riyadh, kind of a who's who of leadership as well. You have former Rakuten mobile CEO Tariq Amin at the helm, and you have former execs from Microsoft, Nokia, and more. I guess in terms of the core focus areas as well, just to, I suppose, flesh them out a small bit, I sort of briefly mentioned on a couple there. So you have sovereign cloud and high-performance AI infrastructure. You're going to have AI solutions across key sectors: energy, healthcare, manufacturing, financial services, embedded AI devices, and building out innovation hubs for local IP and talent as well. So we had a long list of announcements as far as the tech giants who are going to be involved to this end. It seems like there's no one has been excluded as far as that's concerned. Obviously, you have your AMD, Nvidia, Google Cloud, AWS, Cisco, Microsoft, Grok, and all sort of closely aligned with the Saudi Data and AI Authority. So look, it's a massive announcement. And look, we're going to touch on, there's been plenty more as well, but I think it's the only place to start on one level, in that we now have Saudi's answer, I suppose, to G42 in a UAE context, and we know now.
Yeah, last week we talked about G42 and how it's the biggest state-owned company that's starting to work on or in the AI field. Historically speaking, most state-owned companies in the GCC have been consumer-facing, like telecoms, utilities, and airlines. And residents in those countries, including myself, and I lived in Dubai and in Riyadh, we had little choice to choose. But now we're seeing this big shift where governments are building state-owned B2B companies in sectors like AI and tech infrastructure. And they're competing directly with private players, global private players. How can these state-owned B2B newcomers really compete and attract clients without relying on a mandate or forcing those companies to use their services? What do you think?
I don't think of it as competition, right? I think enablement in this space is generally needed within KSA and even within the region, right? And a lot of these things are generally driven from government and kind of spill down over to the private sector as well, right? So, and I would say arguably the private sector doesn't have the scale to be able to do the enablement piece that the government can do. I don't think of it as competition. I think of it as enablements within our region because there's a lot of things that are needed. It's not just the infrastructure that they're building, regulations around it needs changing. The sovereignty for data centers is now coming through as well. And this can only be driven through government initiatives and support that is available.
Eyad, what do you think?
And I guess I would just like to add, like, this is basically a continuation of a longstanding policy where, you know, the government, a lot of its mandates today, especially through the PIF, is to develop under-resourced sectors where the private sector might not necessarily have the needed resources, talent, know-how to fill a market gap. So we've actually seen quite a few examples of B2B facing government initiatives in the private, basically companies, so for-profit organizations or entities that are directly or indirectly owned by the government that tackle similar issues in the past. So I think a well-notable example is Ilm today. Yes, it's now IPO'd, but it was a government-owned entity, now successfully privatized and listed in the public market. Again, endless examples, whether it's we're talking like oil value chain with SABIC, Ma'aden, unlimited number of B2B Saudi-owned companies. And again, I think the consistent theme usually is it's a market gap as the structure currently stands today within the private sector. The resources or the know-how are just not there to meet needed demands that are essential for basically achieving this decoupling from oil that we're trying to get to. So I think it's essentially a continuation on that now with a new and emerging sector with, of course, machine learning, artificial intelligence, kind of essentially becoming a requirement to operate in today's world. I think a big question on everyone's mind who interacts with this space, me included, where today we have about 25% of our portfolio in Saudi, either essentially agentic AI or AI enabled. The biggest risk we had there when we were writing these checks is, okay, like today this might work. Fast forward 5 years from now, we run into data sovereignty issues and basically ownership of that supply chain. This doesn't exist locally today. So what do we do in that world? And I think what we got yesterday was basically an answer to that, is that the infrastructure will be there. And it was definitely a sigh of relief, I think, for anyone that is, let's say, down that supply chain. Again, like we're a micro fund at the end of the day that invests at pre-seed and seed stage. We're never going to be in the business of setting up data centers and putting, substantial capex to develop the infrastructure needed for the downstream, essentially. So that's essentially my quick take on that development and huge milestone we saw yesterday.
Look, one other thing is there is a bit of a talent gap that exists as well, right? And I think it's important to look into these partnerships in more detail as well, because it's not just funding. So the partnership or collaboration with AWS, part of that entails training up to 100,000 people within this space of sort of cloud and ML certification, and up to 10,000 women that are also targeted in this in tandem with other universities and sort of educators to help bring about the talent as well. I mean, execution is key of how it is carried out, but in theory, I think a lot of these elements have been put together, crafted quite well to enable sort of the infrastructure, the cloud, localized language learning models and applications that are available to help not just sort of on the government side, enterprise side, but also on enabling the startup ecosystem very well as well. Certain sectors have a lot of restrictions. Like if you look at fintech, they're bound to use, data needs to be hosted locally, right? And then, so you have I mean, initiatives like this help a lot of different sectors potentially in the future to be able to grow. And there's a study from PwC which looked at potential impact of initiatives like this. And I think what they quantified was the AI could potentially add about 130 billion USD to KSA by 2030, right? So I think these initiatives are quite needed to really help push the ecosystem forward. And I think even if you look at global AI ranking that is there, Saudi Arabia jumped from last year from 31st to 14th. And then they were number one across government strategy for AI. And then the commercial space, which is startup and SME ecosystem, they were ranked number 7 as well, right? So I think these things we do have a good momentum moving within the space. And I think that will help push it a lot further as well.
I definitely appreciate that. And I see how the private sector is not big enough to start such an initiative to enable other companies to do all that. But on the other side, I see how it's enabling, but also I see how it might be a potential for control, especially controlling the data, controlling the narrative, controlling everything around AI and data in Saudi and in the region. And also, I still see it. I know you mentioned it's not competition, Hassan. Maybe it's not competition with the international players, but it might be a competition locally. As you mentioned, Eyad, if I am an early stage investor looking at an AI company, I would have that fear. Would a state-owned company be built later on to do something similar? What if one of those big giants start doing the same service or product that this new small company is doing? How would you think about that as you invest in early stage companies, as an angel investor or as an accelerator yet?
So I think it's part of the market reality at the end of the day that control is basically at the core of this whole AI and basically compute power debate. The context of this, again, and I think the milestone or basically the landmark moment, the investment, and again, like I think we've seen what happened to chip makers' stock on the back of that, is basically a clear reversal of the previous administration's policy in terms of basically what they had for AI diffusion and basically limiting compute to certain parts of the world, where essentially it was kind of trying to set the stage for the winners and losers of this AI battle of computing minds, so to speak. So I think in that sense, I wouldn't classify it as control per se, but essentially basically sovereignty and independence for the local ecosystem to try and operate outside of that limitation that was enforced at the IP, let's say, level as it stands today. Hence the positive market reaction. And again, like I think that same market reaction that we saw in the private sector, not just for the chip makers, but basically anyone down that value chain kind of saw some uplift in their stock price on the back of that news yesterday. It's pretty much the same sentiment locally at, let's say, the end of that supply chain, where essentially, yes, I'm more inclined to put capital in basically the output of that infrastructure in the local scheme. Again, could it be a deterrent for other entities that have the bandwidth, maybe from like a foreign direct investment side, to come in and again, because like we're starting with the position that this type of resource is not available in the local private market, so to speak. So I would think the only alternative would be foreign direct investment to come in and fill that gap. Again, looking around the world, there are very few players other than those announced yesterday and before that can essentially execute on this. So I think that was basically the conclusion of that there.
And I add to this, look, there's other flip side of this. I think the data point is something to be seen. But I think, look, from an investor's perspective, if you're investing into startups within the AI space, I mean, exits have been generally very slow within the region, right? So I think entities like this can potentially be exit routes for application layer startups that kind of come through that can then be bought out, right? Because you have global players that can potentially look at acquisition, but you need that at a local level to coexist as well, right? And I think there are other possibilities that can stem from this.
Okay, let me go back to Humain itself. So I really like the vision. They have a big vision. but they're starting with an MVP, which is what startups do, and their MVP is basically built on top of Grok. So they're kind of first a reseller for Grok, but then with all these chips, they have the vision to build a full stack AI company, from chips to models to applications, so covering all the layers. Now the question is, can one company realistically dominate or provide a full stack AI service?
Technically, yes. And again, but is it necessarily going to be a monopoly across all these applications? Not necessarily, but it definitely, I think, will function as an enabler in a lot of ways. And again, we've seen similar experiments and essentially case studies in the Saudi market where an industry was not necessarily there. The government or basically its commercial arms were instrumental in kickstarting that industry, and then private sector followed. I think a well-notable example of that is the VC industry itself, as it stands today. I think it's no surprise that a lot of the operating funds in Saudi and in the region have benefited from initially one government program or one government entity that was functioning as the anchor LP for a lot of these funds. And then another entity came in from another government program that basically introduced new dynamics to the market. And now we have the private sector where we have anything from corporate VCs or corporate investment arms to even family offices actively participating along these lines and basically mimicking what they saw from an entity that created an ecosystem or a market. So I think it's going to follow a lot of that. If history is an indicator of what's to come, I think it's going to be quite similar in that sense.
Makes sense.
Yeah, look, I'll add to Eyad's point. I think that makes a lot of sense. And if you look at other sectors as well, even sectors that are now being funded from a lot of VCs within their thesis, a lot of those sectors do stem down from sort of government initiatives within those sectors where there are government-backed companies or government-owned companies within that space, but that does spill over to creating or kickstarting that sector that is underdeveloped, and then private sector kind of comes through, right? And you can see that across several different sectors within KSA to know that has happened. It hasn't led to sort of just a monopoly in competition, but more of enablement and ability for then the private sector to kind of come into the sectors and then take a risk.
For my last question on this story, for founders that are watching today, we have G42 in the UAE, we have Humain in Saudi. They're building infrastructure. What should founders focus on? What subsectors or verticals should founders focus on? What should they look at? What problems should they focus on solving?
It really is basically just a enabler of people to move a little bit faster, I think, across the downstream of having that infrastructure in place. So I think if anything today, there's no uncertainty regarding the feasibility of anything AI enabled or AI driven or agentic AI, what have you, to basically sustain over the long term. It's no secret that I think there's a debate today between core legacy and basically the new version of cloud AI and basically ditching old tech stacks for more AI enabled or AI compatible ones. So I think the best and easiest place to start in terms of low hanging fruit is trying to get rid of, I think, anything that's legacy in that sense. And I think the newer companies have an inherent advantage there. And I think we're going to see a very interesting, let's call it a vintage year on the back of this, because I think companies that are coming into this new reality are honestly going to be better equipped to handle that future infrastructure change. So I think that's a no-brainer in that sense. And of course, staying up to date in developments and the announced strategy is always existential. So you really need to stay aware of what Humain's strategy is in terms of go-to-market and first stages of operations, and trying to leverage that to your advantage as much as possible. We've seen it across different sectors too. So, we've had PIF's space company, NEO Space Group. I hope I'm not butchering the name, but again, like it has been an enabler for one of our portfolio companies at least. So it definitely allowed them to start operating at a faster pace in a lot of ways. So again, but that comes down to initiatives taken by the founders themselves. So to actually establish these bridges, try and see if you can actually be confident that they have in place and see how you can work with them, an early partner in developing that sector.
So I'll add to that. So I think one of the things that you mentioned is at this point in time, Humain is kind of building based on rock, right? I think there is a lot of opportunity for founders within data models and in the application layer specifically. Again, like I mentioned, potentially there could be acquisitions, but generally across all sectors, whether it's sort of energy, healthcare, education, fintech, there's a lot of applications that need to come about and use AI models to bring about efficiency, right? So there is a lot of potential in those things. And even if you look at the cloud and then the infrastructure side, I think there's a lot of support services that are potentially needed that stem down from that will also be utilized locally, right? So energy is a big need. There's a lot of solutions that are needed there, battery storage and water or cooling systems that are needed. So there's a lot of other spaces that I think if you follow what Humain is doing, I think for founders, you can figure out a lot of opportunities where potentially you can have an acquirer, you can get a potential offtake, or you can have B2G kind of sales potential as well, apart from the B2B angle.
Okay, we're still in Saudi, still talking about AI, but now moving to the hardware part of things. Jamie, what's Nvidia announcing in Saudi?
Exactly. So again, this is something that's been in the rumor mill for quite some time as well, is when are we going to get access to these newer generation of chips, and we're finally here. So we're talking hundreds of thousands of Nvidia's most advanced GPUs over 5 years, as well as a Grace Blackwell supercomputer as well, 500 megawatts of projected compute capacity, which is probably more compute than is required in the short term, but it's certainly enough to place Saudi, I think, in the top tier of global AI infrastructure. For sure. So I suppose to touch on that, the first deployment with Nvidia, that'll include 18,000 GPUs. They're going to build with Humain 2 AI factories. So obviously massive sovereign compute facilities, so the powering LLMs, robotics, simulation, etc. Hassan touched on it earlier as well. Obviously, the goal of Humain to train thousands of Saudi developers as well on AI model training, robotics, and digital twins as well, using NVIDIA's Omniverse platform. AMD, they've signed a $10 billion joint venture with Humain as well for data centers, spanning Saudi and the US. AWS and Humain, they're going to be investing $5 billion to build an AI zone and marketplace of government-grade agents. So look, all of these deals, I suppose, have been enabled by a massive shift in US chip policy. The Trump administration rescinding the Biden era, AI export restrictions, and instead pursuing this sort of country by country chip diplomacy. And as we sort of foreshadowed at the beginning of our conversation, the UAE appears to be next. Today, just for reference as well, we're recording this Thursday morning, so unfortunately we can't shed light on exactly what sort of shape this will take. But look, I'd imagine we could be chatting about this next week as well, Ahmed, on the next episode too.
I'm sure
I've no doubt about that. But look, massive moves, a massive amount of capital as well. My God.
What really excites me is the knowledge transfer that would happen with all this. I mean, opening those factories in Saudi, training local talents, that would be huge.
Yeah, look, I think it's basically just cementing the point on imagine a world where this was a private sector initiative. I don't think this would have happened. So to get to basically a position where you reverse a previous administration's policy, that's beyond the private sector scope. So I think that's why, I think, yesterday is described as a milestone in a lot of ways. So again, definitely the hardware without the tech transfer and talent let's say, development is also something that would not have been possible, I think, purely within private sector's resources. So yeah, exciting stuff.
It definitely is. Look, and I think, look, from my understanding, restrictions have been removed both for Saudi Arabia and the UAE, right? And if you talk to a lot of startups on the ground within this space, and you talk to a lot of capital allocators as well, I think the hardware side was always a big concern, right? Whether we would have this hardware available for computing power to kind of bring to be there. I think that was a discussion point over the last 2 years on restrictions of the GPUs to kind of be made available over here. And I think that provides a lot of clarity to both founders potentially that are over here, but then also capital allocators, right? I think it's a big comfort and much needed for initiatives like Humain as well to actually have elements of success be available. So I think it's a fantastic win.
You all talked about this reversal of Biden's administration policy. Is there a fear of China coming in and selling the region its own tech, and that's why Washington is trying to preemptively sell all this tech to the region so that American tech will dominate the region, not the Chinese tech?
That could have contributed to this, but I think, look, at least I think Saudi on a global footing has positioned itself and has built a lot of other allies. The U.S. is a very long-standing relationship that's been there 90 years, right? I think the announcements that are there on export restrictions, I think this is one small piece. I think discussions that have happened were across a lot of other initiatives, not just sort of on investments in AI and collaboration, but geopolitical and other areas that were covered.
Well, I think it's just the market doing what the market does at the end of the day. Because at the end of the day, from the US's perspective, if you think about things from a more tactical, strategic way, Nvidia, basically the whole AI ecosystem, Nvidia, of course, benefiting from the infrastructure or the hardware of that value chain, is essentially one of the few remaining truly defensible sectors in the US today. So I think that, and maybe probably financial services to a degree, but when you think about it from a financial services perspective, I think that card's been tapped out from a strategic negotiating perspective and in terms of international bilateral relationships and trade. Manufacturing, I think that's a thing of the past. When it comes to basically specialized tech, specifically within artificial intelligence, I think that's where the US still has some form of global dominance. As impressive as Chinese advancements have been in that stage, we have yet to see something that mimics that compute power. And I think China in itself is trying to catch up to get to that point. And I think at the end of the day, it's just a fair game when it comes to, playing your cards essentially. In that game, you really have to go with your best foot forward to a degree. So I think that's just basically market dynamics. And yes, as the US trying to be politically savvy in implementing this, absolutely. But then again, I think that's expected.
It seems that we have two announcements, Jamie.
So 2 AI-focused funds. I think we've kind of been waiting for one of these very sector-specific AI funds to emerge. And like a bus, 2 come along at the same time. So we have
the more the merrier.
Exactly. So look, we've STV, who have launched a $100 million AI fund backed by none other than Google as well, which obviously marks the tech giant's first ever investment in a VC firm in the region as well. So very, very significant from that perspective. And look, it's also, I suppose, the first dedicated AI VC fund in MENA led by a major player as well. That's going to be aimed squarely at AI native startups across the MENA region. STV, arguably Saudi Arabia's biggest VC firm, $900 million in AUM, have historically leaned, I suppose, more towards the growth stage side of things. But I think this fund is expected to focus on earlier stage AI startups. They've specifically sort of mentioned application AI products, localized AI models for Arabic and regional markets, and also foundational infrastructure to support AI too. highlighting, I suppose, the glaring gap that exists in that, only 1.5% of VC funding in MENA last year went towards AI compared to 38% in the US context, or even 13% in India. And also the other VC fund, which you mentioned there, Ahmad, as well, Wild VC, also another early stage firm that's been founded by Saudi investor Talha Hassan Al Jabri. It's a $50 million fund, again, exclusively focused on AI. In terms of the backing for this, it's backed by the family office of Lawrence Galub. It's also their first investment in the region. So obviously they have that sort of cross-border footprint from day one as well. Again, a similar focus, really, I suppose, on one level, the sort of fun sweet spot is the kind of AI middleware and applications. So they're not focusing on the foundational models, more so kind of everything around them. So from sort of orchestration layers to verticalized AI tools as well. So look, plenty of capital there. Let's just hope we have the deal flow.
Let me first ask about what those two funds are targeting. So STV said, as you mentioned, Jamie, they're targeting startups with in the application layer and some critical infrastructure, while at the other end, Wild said they're targeting middleware startups. Is the application layer lucrative enough for VCs to invest in it? I know, for example, in the internet, the application layer, or in mobile, the application layer brought in huge returns. How about in AI? Is it the same story, or it's going to be different?
No, I think it's going to be quite similar in that sense. And again, like I make parallels between this, of course, the cloud computing revolution when that came out, and of course with like in the internet going basically mainstream or going retail back in early 2000s or late 90s. So I think it's just quite timely that these funds are coming. And again, like going back to our earlier point, where I think new startups founded post this inflection point are going to be at a natural advantage in terms of how fast they can move and scale, because they're simply built on a tech stack that's more compatible with this new reality that we're in. I think, again, a lot of the terms are used interchangeably and used very loosely. But what I took from both press releases is that they will have, like, of course, with STV's stated mandate, it seems to be a bit more broad across the supply chain or the value chain compared to our Wild VC's, I think, mandate, which indicates that it kind of sits between consumer facing or B2B facing, and then basically the engines themselves are basically the models themselves. So I think, again, it's a new market. I think we're going to discover in time a lot of new terminology in addition to some of the terminology that's floating around today. But I think it's just people trying to essentially define this new value chain and which part of the value chain they want to bet on. And I'm trying to think, again, what was really interesting, I think, about both press releases is that, and I could be wrong there, but I think both are really some of the fewer funds that I've heard about that got seeded by, or at least anchored by, essentially foreign LPs rather than state-run entities that have historically been at the forefront of anchoring these funds. So again, maybe showing that shift of how the private sector, or in this case, maybe foreign direct investments, is playing a role. So I think that was also quite interesting and maybe not as apparent from the headlines.
And just to double down on that, Eyad, so we have one of them backed by Google. And I know Abdurrahman Trabzoni worked at Google in the US for a while before starting STV. And the other one is backed by a family office. And this is really exciting news for me. So a family office from a different country, from the US, is coming to Saudi and investing or anchoring a VC fund. And by the way, backing first-time VC fund manager who's a female VC. The diversity of this is amazing.
Hopefully more to come. I essentially with the foreign direct investments and LPs, of course, it's amazing news. And again, like it just shows, I think, that hopefully the like global financial markets are kind of paying more attention to the opportunity on the ground. So just hope that that trend hopefully continues.
Yeah, it's a lot of firsts. Hassan, what do you think?
Yeah, so I think it's very interesting and exciting to see, right? So Google, not just on the infrastructure side with the government and PIF and other initiatives that they're working on, it's nice to see that they're coming into a fund to deploy across the AI application layer and localized models and some critical infrastructure through SDB's fund, right? And I think I would say, look, one thing that's important is definition of STV, and probably Tala as an angel on World is probably very different as well, right? So I think they will inherently be investing in different stages, and they will have different approaches to invest. And it's exciting to see, like you said, a family group from outside coming in. I think both Google and the family office from outside investing will probably push some local players and local family offices to look at this space a bit more serious in terms of deployment and allocating in the future to this space, right? And I think it will lead other potential funds to probably come out focused on the AI space that will try to tap into some local funding as well. So I think it will push this forward in terms of funding supply to potentially come online further apart from these announcements.
I wish we know the numbers. How much did that family office invest in this $50 million fund? How much did Google invest in this $100 million fund? Those numbers, $150 million, they sound big when it comes to the size of the VC firms here in the region, but they also sound small compared to the government initiatives and what the government is allocating for all this. What value or how can such small funds compare to those big numbers? How can those funds really help?
I think, look, early stage deployments need to happen as well, right? And I think it's funds like this that can take a risk earlier and deploy at an earlier stage of a startup's life. I mean, in the large scheme of things, if you're talking about AI, I mean, okay, 150 million is not too large, but I think this is a signal of a start where potentially more funding will also come through from other fund managers that may want to have a dedicated vehicle or investment fund just for AI. So I think, to me, that signals that potentially there will be other capital that will come into play within the AI space that pushes even at again, they need to deploy at an earlier stage, and that kind of helps build the funnel to go towards enabling companies to kind of become at a larger stage, right? So PIF is also trying to set up a $40 billion fund that's investing into AI. That's another initiative apart from Humain, right? But you need investments across both the early stage all the way to the later stage.
And I think there's still also a fair bit of dry powder already in the system. It's definitely focusing on AI. So even if it wasn't like part of the fund's advertised mandate when they closed back in 2021 or 2022 or 2023, us included, where of course like everyone has, I guess, some variation in their sectoral allocation if that's part of the fund mandate. A lot of times there's an opportunistic bucket. I think a lot of people are really tapping into that if they don't have set boundaries for sectors to get exposure to the sector. But again, like we also have to keep in mind that AI is turning into a broad umbrella term, and essentially all business models will be AI affected one way or another, or basically we'll have to adopt some form of AI in their application. So I think it's just a matter of time before it becomes another cloud, or something that essentially mimics some of the technological, evolution of the past, essentially. So I think it's just basically a reflection of what the market is currently focused on today in a lot of ways.
And in the next story, we have an example of a company that's utilizing AI in construction. But before we get to that, let me ask you about this new trend in the VC echo chambers, if I may say, on LinkedIn, the new multi-stage, multi-region, and multi-asset class model for big VC funds. It's been talked about a lot over the past 2 weeks. I've noticed so many VCs post about this, including VCs from the region. For example, Ashos Weekly from Sukna Ventures talked about this and many others. The debate now is, should all small VC funds, including those very laser-focused AI funds? Should those micro VCs stick to their laser-focused investment thesis, focusing on early-stage equity, or those small funds are better off following that new model that started by those mega funds in the US, like Lightspeed, Sequoia, A16Z, and others? What do you think in general about this new VC model? A lot are saying the VC model is dying, but I always say, no, it's not dying, it's evolving. And everyone is evolving in its own way.
So look, I would say our ecosystems are a lot more nascent, right? So I don't think we're there yet at that point in time. Even if you look at secondaries, it's still something that's new, theoretically sounds nice. Some people are trying to look at setting this up in sort of a bit more PE style, also to kind of look to come about. But I think our market is early. I think there's still a lot of potential within the traditional VC model that exists, at least at this point in time. And I think for fund managers, even if I think about myself, look, we always like to build in flexibility for ourselves. Yes, we do have a thematic view on sectors that we prefer to take a much more concentrated bet on. And that is part of the marketability and the thesis that we build and we talk to investors about. But we also build ourselves a lot of flexibility inherently within the terms and conditions and how it's structured to be able to pivot and change as well. Look, market dynamics can change, regulations can change that open up new opportunities. And you as a fund manager, you need to be able to adapt to that to capitalize on those opportunities. Yes, you keep your general thesis in play, but have that flexibility and opportunistic bucket. I think it's important to do within a market like ours.
Yeah, I think only time will tell there, but there's definitely like inherent challenges in our market. I think also, when it comes to evaluating what an opportunity is intrinsically worth, there's no one better than a primary investor to figure out what the price of the secondary might be, right? So I think, if anything, it's something that hopefully unlocks hidden value within the system. So it is, in my view, a net positive. And I think we'll continue to see some evolution in how our funds are structured, what they look like from a legal and commercial perspective, just like what happens everywhere around the world. Like, again, and I think another timely topic that is very interesting to see in international markets, especially in developed markets, the US particularly, is evergreen funds and funds with no terms. So I think we're still a far away place from there, especially given the typical limited partner profile in our region, where the idea of investing in something that has a very low distribution ratio compared to conventional assets and real estate and dividend producing stock is still somewhat of a basically red zone where no one wants to go to. So I think we'll continue to see a lot of evolution, but also hopefully innovation in how we do things from a local perspective in a manner that fits within our market realities. Again, I think time will tell whether this will be the correct approach in terms of what funds should be doing next or not.
So yeah, on that topic, on the continuation funds, and Sequoia is the biggest example, the line between investing in public assets, public equities, private equities, and even debt product is blurring. And even the line between private equity funds, hedge funds, and VC funds is kind of getting blurred as well. But I wonder why we are still not seeing, even in the US, publicly listed VC funds, or whatever you want to call it now. It's not just VC, like investment funds that focus on the private markets. Why are we not seeing that yet? Are we going to see that in the future with the interest in public equities now?
I would think so. We do definitely have a lot of public companies that basically masquerade as something else, but when you peel the onion, it really is kind of a VC fund. So like, I think the closest example there might be Rocket Internet to a degree. I know that's more of a, studio operation, but again, I think it's the same underlying risk that someone would have gotten had they invested in the VC asset class from a purely fundamental, approach. Another one is, I think, a company based in Canada, Constellation Software, where they basically just buy, significant stakes, if not full acquisitions of, mid-cap, if there's such a term for VC stage companies, where they essentially reached mid-cap level, traction, and they essentially consolidated, and it looks like a huge balance sheet and P&L, but essentially it's a portfolio of early or relatively early stage companies that are, above a certain EBITDA threshold. So I think we've seen approaches to essentially masquerade this to the appetite of public investors, which naturally are more loss and risk averse compared to those that can withstand the liquidity of private markets, right? And I think also the regulatory burden there is something that is quintessential. So I think basically the responsibilities and fiduciary duties associated with a public company can be burdensome to a degree when you're trying to invest in this asset class, because let's face it, like, you're in close operational contact usually with your portfolio. Essentially, like, if you want to comply with public levels of compliance and disclosure, I think it puts the question, are you going to be as efficient as a private institution where you don't necessarily need that baggage and can operate at a fraction of the costs needed? So I think a lot of these elements really play into it. But again, is it something of seeing more examples of in public markets? Absolutely not. And I think, again, local public markets really vary from the American standard or the developed market standard in a lot of degrees. So, for example, I think it's no secret that in the Middle East, retail investors constitute a disproportionately larger percentage of the volume in the trade compared to, developed markets. So I think it's a regulatory conundrum for regulators in a lot of ways as to whether this should be something that is available to investors, given the profile of the volume available in our public markets. But you can also make the argument that because our markets may be, if I can use that word, more democratized, and people have different perceptions of risk and reward, maybe something like this is an appropriate, let's say, instrument for the public markets. Again, I think time will tell, but ultimately someone needs to take the plunge and give it a try and see if they can get something approved.
And I think, look, within the market, not a lot is materialized, but there's a lot of public companies or a few public companies that I've spoken to that are looking at alternative models. It may not be necessary for them to be able to set up a fund and deploy within the space, but then they can work with a local asset manager or fund manager that they are comfortable with to allocate to them with a defined criteria, something that strategic works with them, and kind of get that exposure. I mean, it's not just the governance and a lot of other things that could potentially be an issue, but then for larger public companies, even if they're allocating 100, 200 million, it's very small in size. And if you're deploying that across multiple companies, it becomes very difficult to follow up and manage. They don't have resources, but they are talking to local fund managers to kind of look at other solutions where they can then kind of work to get exposure, right? And I think based on my discussions with one or two other fund managers as well, they are looking at some creative solutions. There is a fund manager that is looking at their VC fund to potentially be listed and tradable so that investors can then trade the units at a later on point in time, right? I think regulation change has happened over time. So in the past, it wasn't a consideration because regulations didn't allow it, but our capital market regulations have been changing fairly quickly over the last couple of years. And people, when those regulations come about, that kind of helps people get into these discussions and think about it theoretically and then move towards potentially having that reflected in the future. From what I see on the ground, those discussions are happening. There is innovative structures being considered, when we see it on the ground, I think, I mean, that's to be seen. But I think it will eventually go in that direction where next year and the year after, you will start seeing these things come about.
I can geek out on this for hours. Like a question that came to mind now, in the US, there's Securitize that are trying to tokenize equity in VC funds. And there's Spice VC fund, one of the biggest examples of that. But anyway, this is a topic for another episode. Jamie, very quickly, can you tell us about the last story we have?
Yeah, exactly. Very quickly. And look, we'll keep it on theme. Actually, Ahmed, out of interest, do you remember the last time we discussed WakeCap?
I remember the name. I can't remember what we said at the time.
This was one of our very first episodes, I think. So this was like
Oh,
last
wow.
July. So back then they just acquired a Silicon Valley based company.
Okay, yes.
They'd acquired Cruise by Core, and they were establishing an R&D base in the Valley. And lo and behold, some time has passed, and we now see that they've closed a $28 million investment that was announced as well at the Saudi US Investment Forum to expand its services. So in terms of WakeCap, it's a sort of a IoT platform, real-time visibility across like workforce safety, productivity, all that sort of jazz. But look, I'm not saying that I predicted at the start of the year that construction tech was going to have its day in the sun, but I did predict that, and it's coming to fruition. So I'm feeling extraordinarily smug.
Okay, thank you, Jamie. So it's one of those examples of AI-powered or AI-enabled companies applying AI tech into different industries. And this one, it's the construction industry. Any reactions on this company? Do you know the founders? Have you interacted with them over the past year or so?
So look, I met the founder, but not in the past year. I think it was some time ago, maybe 3 to 4 years ago. So from what I know about the business then versus now, I'm sure it's a completely different business. I'm not too well versed with their business, their metrics, their customers, and what they're doing, at least at this in the recent time. From what I understand, I mean, they're helping with real-time monitoring between contractors and the project managers, and potentially reducing risk and bringing about efficiency, right? I think within that context, I guess, I mean, look, it does make sense that AI can bring about a lot of efficiency within the space, right? With specific use cases. There's a lot of injuries and incident management and a lot of other areas where there is a lot of use for AI for efficiency, less damage to potential workers within that space, faster incident responses when there are incidents that can happen within a construction site. It is a large market size, right? I mean, even from an investment allocation perspective, you know that the largest allocation generally goes towards real estate. Real estate is within everything, and that means sort of construction, contracting, all of those are huge markets. So, I mean, it's nice to see that they were able to raise the very decent investment tickets to kind of expand on AI within their existing solutions where they've tapped into customers and seem to be doing well from at least what I can see afar.
Do you envision them to become a unicorn anytime soon? Is the market large enough, and is the company working on solving a big problem that would return the outsized returns that VCs are looking for?
I mean, look, the market is large enough to warrant a potential unicorn to come through. Are they the company that becomes a unicorn? Look, I don't know the business and the founders well enough to kind of make that judgment call.
Okay, fair enough. Eyad, what do you think in general?
Yeah, I think, as with everything, time will tell. But I think another interesting note there is that I believe this is the third Series A we've seen this year in the Saudi market, which is lower than I had expected going into this year. But again, understandable given the holiday schedule with when the Eids are coming in, and I think a relatively shorter Q1 and Q2. I think we're going to see a lot of Series A deals a bit back-ended this year. So hopefully Q3 and Q4 will be busy on that front. But I think what's also interesting is that I believe this is the second construction tech deal. So we've seen bricks, I think, before that this year. So on your question on the market sector and appetite, there's a lot of construction going on in Saudi Arabia. So I think it's very thematic in that sense. And AI, of course, being the cherry on top is even better. And I think there, it seems, that company an Aramco contract not too long ago, of course, received investment from Eyad previously. I'm hoping that I'm sure Eyad has always been great at adding value to the portfolio companies. But I think if these are early indicators, probably they're hopefully destined for success. But again, like it's really difficult to tell from round announcements, because I'm sure like you've suffered from this too. Like it never really talks about the exact terms. And of course, there's always a headline figure, but is it, are there any covenants, or are there any requirements, let's say, or earnouts or clauses that were not announced? So it may be actually a part of that amount, or is it all equity? Is some of it debt? Are secondaries involved? So like it's anyone's guess. But I think another notable observation from that PR is that I think we've been seeing, of course, round sizes creep up a little bit as the market develops. And I think that applies across all stages, notably in the earlier stages, I would say more so than later stages. But I think generally speaking, we've been seeing an increase in round sizes across the board. So hopefully either a positive indicator or an indicator of things maybe getting heated up to an unsustainable degree in terms of people's expectations. But again, time will tell, as always.
Time will tell. And both of you have been very generous with your time today. And I have to say, you both are very thoughtful, calm speakers. I really enjoyed this and would love to see you again soon. Before we wrap up, a big thanks to OCTA for sponsoring today's episode.
If you want to get paid faster, access financing, and automate your receivable process, head to weareocta.com. That is weareocta.com, and take control of your accounts receivable today.
With that, Eyad, Hassan, thank you so much again. You've been very generous with your time today. We really appreciate you joining us and sharing your opinions and thoughts with us.